Hey everybody, it's Julia Corky with Baird and Warner, and I'm here again with Kevin Napoleon from Key Mortgage. And let's talk about people like me, self-employed. What do we need to know to buy a home?
It's the age-old question. There's a lot of things you need to know. So, number one, for sure, you want to talk to a mortgage person as soon as you possibly can, because the big downfall of being self-employed is that we're going to rely on how you report your income to the IRS. And as you know, Julia, a lot of people that are deemed self-employed, which is basically anyone that owns a business or is 1099 or reports their income through a Schedule C. We are going to use, however you show your income to the IRS, we're going to use your adjusted gross income. So if someone makes $100,000 a year, but they're able to also sort of manufacture $100,000 in expenses to dilute their tax liability, we go off of that after adjusted income, which in many cases might be zero. It might be a loss because it helps you on the tax side. Mm-hmm. So keep that in mind. Some people do have to kind of prepare 2 years in advance because that's the default. We look at a 2-year history of tax returns, 1099s. You typically have to be self-employed for at least 2 years. So you can't start a job last week or start a business and then go out and buy a house. You're going to have to wait a little while. So just be aware of that. That's always been an issue. And then the question comes up is like, well, what if I have these tax returns that show no income, but I make a ton of money? I have lots of cash flow. I just don't show it on paper. Are there any other options? And the answer is yes. So there is such a thing referred to as a bank statement loan, which means we're going to look back in your last either 12 or 24 months of bank statements. We're going to look at all your deposits going into that account. We're also going to look at some of the money coming out of the account, but we'll create more of a cash flow snapshot, and we can utilize that in lieu of tax returns. That's a little bit more involved process, obviously. Mm-hmm. It's a lot of paperwork. Some different terms and conditions of that type of loan, but that is an option, and it's something that people are starting to use more and more as this becomes sort of pushed out in the marketplace, which is exactly why we're talking about this. So people who are self-employed are aware of the fact there are options besides the traditional tax return route. So it's something good for all the, those buyers that if they don't know, they may never buy a house because they just don't want to show more income and pay more tax to the IRS, which I don't blame them.
Yeah, that's good to know. Yeah, that's important to be able to have some route to go. If you can't, my taxes, like I said to you before, I had to amend and all kinds of stuff to buy when I purchased to make it happen. So good thing things have changed.
Yeah.
All right. Yeah. Well, thank you so much, Kevin. And we'll see you guys next time on Monday Mortgage Minute.